One of the biggest decisions you will make as a business owner is deciding how you will structure your business. Should you operate as a sole trader, or should you instead set up as a limited company? Each choice comes with its own benefits, and each choice comes with its own challenges. In this week's I Hate Numbers video, I'm going to break it down in simple terms to help you decide which option is going to be best for you. Let's start this by understanding why this decision is so important. Now, whether you choose to be a sole trader or form a company, commonly known as an LLC outside of the United Kingdom, it impacts on certain key areas. Those areas include the records that you will need to keep, the type of accounts that you will need to submit to the regulators, HMRC, the amount of tax you'll pay, and also the level of personal protection you will enjoy and have. And let's not forget, we also need to take into account the overall cost of actually running your business, what we might call the compliance costs. Now, your choice could even influence how potential customers and suppliers take of you and perceive your business. Now, a sole trader is exactly as it sounds like. It's you running your business, and in legal terms, you and your business are one of the same. Now, the advantage of that, it's quick and easy to get off the ground. You can register online, you can open up your business bank account pretty much straight away, and off you go. And even though it's not a legal requirement, you can still use a mixed account. It doesn't have to be a dedicated bank account, but I would recommend that you do so. You can hire staff, you can work with freelancers, and so serve both big and small clients. In a personal capacity, when I started my I Hate Numbers business, I started life as a sole trader. But here's the catch. If you are a sole trader, you are personally responsible for everything that goes on. If your business gets into debt, God forbid, or faces legal issues, hope not, your personal assets like your house or your car could be at risk. Just think of an example. Let's take somebody, let's call her Emma. Emma runs a small bakery, and as a sole trader, she will keep track of her sales and her expenses. She will complete her self-assessment tax return, and she will pay her taxes accordingly. Now, that seems straightforward. But if Emma's bakery runs into financial troubles, or somebody sues her over a dodgy cake, Emma herself would be liable for the consequences of that court action, would be liable for the consequences of that debt not being paid. Now, let's talk about limited companies. Now, unlike a sole trader, a company is a separate legal entity. Think of it as a brand new person that is created. Not quite Frankenstein's monster, but it's a new legal entity that is created. Now, this legal entity, this person, can sign contracts, take on debt, and even continue to exist if you decide to step away from the business, go to retirement, run off to a Caribbean island somewhere. The company is still there unless you dissolve that. Now, creating a company is relatively simple and affordable. Once it's formed, it operates under specific rules which are guided and governed by the Companies Act. But this does mean more paperwork and stricter reporting requirements. The Companies Act applies to companies irrespective of size, so whether you are a small single shareholder director company, the rules of the game will apply to you equally as it would be for a much larger company. Imagine I start I Hate Numbers Limited. Now, my company sends out invoices to clients, will manage its own accounts, and pays corporation tax on its profits. As a side note, folks, by the way, my company is actually called I Hate Numbers. Now, if the company faces financial difficulties, my personal assets, like my home, are protected. Unless I give a personal guarantee, that protection stands. Now, I must follow the rules about how money flows between me and the company, and I will have more administrative responsibilities. So, why might you choose one over the other? Let's have a closer look. Now, as a sole trader, it's easier to set up and manage. You will have fewer reporting obligations, and it's often cheaper to run. However, as a company, you get more personal protection. There are much broader and better opportunities for tax planning. If you're a sole trader, by the way, those profits that you generate, whether you use them or not, are subject to tax immediately. Not so with a company and an individual. And it's easier to raise funds or sell the business later. Now notice I use the word easier. Now let's take another example. Ali, for example, started a tech business. He chooses a limited company because he wants to bring in investors, but he also wants to ring fence and keep his personal assets separate from the company's risks. Now this gives him the confidence to grow his business without worrying about what would happen if it all goes wrong. Would he lose his home? Would he lose his personal assets? And that is not something that's part of his thinking. Now, what should you take on board? What should you think about when you make that choice? Number one, your business goals. Are you looking for a simple life? Are you looking for simplicity? Or do you plan to grow and at some point in the future, bring on board and attract investors? Number two, what is your risk appetite? What is your risk tolerance? Do you want personal protection from your business debts? Number three, a third consideration is the tax planning. Now, companies often have more tax-saving options, but the rules can be complex, so make sure you seek advice from your current accountant, or if you don't have a current accountant and need that advice, drop us a line. The next thing to consider is the costs and the admin. Now, sole traders have fewer running costs, but companies require more compliance, more paperwork, and the accounting fees in general tend to be higher for companies than they are for sole traders. Now remember, you can mix and match. You might start your life as a sole trader. Taking my own personal example, that's what I did. And at some point later on down the track, you form a company, or you can run different businesses under different structures. So there's nothing to stop you having one business as a sole trader and another business as a limited company. But please do seek advice. Now to wrap up, there's no one-size-fits-all answer. And I've seen many examples of people forming companies when it wasn't necessary and having sole trader businesses when it wasn't the most appropriate thing to do. It all depends on your goals, your risk, and how you want to manage your affairs. Take the time to understand your option, and like all these things, if you're unsure, speak to a competent professional who will guide you. Until next week, folks, happy consideration.